Hello everyone, welcome to tonight's video. Today is Monday, August 19th, 2013. Let's get right into this chart, the SPY. Beautifully, we've been making a nice little pullback here, profiting beautifully on the shorts. Trim some here at the 50-day moving average as we did hit support here with this gap fill, but I am still holding a little bit more. Notice I called this trend line here, and as soon as it started to consolidate here, it made a bearish pattern. Let me pull this chart up a little bit higher so you can see the candle formation a little more clear. This was the gap up that I was holding up, and notice how in my last video I said that this 20 was going to get weaker. As this was the second hit. And when you're riding a moving average like that, it's no longer major, it's minor. And sure enough, had the gap down and went right to the next support. And yeah, minor support here. We do have that gap fill, 382 retrace, all in this vicinity. This is the lower gap fill of the candle right here. This is the lower gap fill candle right here at the 64.70ish. So we pretty much got there today. So I do expect some support here in the market. If not, there is a little bit more support this gap fill. And what I like about this, it does line up. Let me tell you that spot right now. It's at 164ish, roughly 163.90. The reason why I like that because that's the 20-week moving average. And on the weekly time frame, that is actually minor as well because we actually went through it. That's basically the longer term trend. So, but we are about to hit that 20-week moving average. So keep an eye on that, guys. As we move forward this week, my downside for this week will be, it looks like roughly with this consolidation period, I've been calling this out with the 61.8 Fibonacci retracement, which is at 161.55, and it does coincide with this trend line. See how I like to always match up multiple time frames and trend lines and consolidation periods or candlesticks. So I think that will be the your downside target if we do see further weakness into this market, as low as this consolidation here. So looking at the 75% retracement, 160 to 160, 150, that area. I am planning, if it does get in this area, we'll be selling. If there's any premium left to sell below 155, that's what I'm looking at. But if you look in the kind of more intermediate time frame, this has been your trend line here, so I don't expect that to break. But you never know what could happen. But there is, what I'm saying, there is solid support here. Okay, guys, this trend line. And if you look at a even more macro sense, even a longer term trend at the weekly chart, we have been just trading in this big parallel channel. Okay, guys, so still at the very upper range of this. That's why I had such a short bias way up in this area because we are at the upper band of this bigger parallel channel, and that's why I did start to accumulate some shorts in this area as it did seem overbought. And we are finally just hitting some short terms, some more of a minor support on the weekly chart here. Okay, guys. So that's what I'm seeing on the daily chart. Let's go back again, see if I missed anything. We are closing below the 50 moving average, but that's not, you can't really take that serious until you start seeing multiple closes or confirmation below the 50. Right now, we can easily close back above, just filling this gap, and then kind of shake out the weekends and make another counter trend bounce higher. Your upside target, if we take a fib, if this is the low, which I don't think that will be, I think there is further weakness in the cards. That's definitely a possibility. But let's say if we were to take a fib right now and see this was a low, let's see what kind of Fibonacci's you get. Right now, looking at pretty much with this consolidation, this previous consolidation here, as this 20 starts to slope down, just have to watch that, and that could be the sign of your new trend as this 20 starts to slope down, and you can see right now it's starting to decline very lightly. Okay, guys, let's look at the IWM really fast. Gonna do a quick update for you guys. Not gonna go too much into detail. Same thing here. We're flushing through that 50. Remember my level on the IWM, guys, is that $100 level. Okay, guys, it's beautiful, even number. It's where it consolidated previously. That's where you broke out. So this is your previous breakout level. I think the $100 level will be some major support there for a few days swing, perhaps for the long side. To the long side, I'm sorry. And let's grab a fib and see where that takes you. Let's see. And it takes you to a 50% retracement. So right in that vicinity, that's where I'm looking for support. So the next day or so, I'm looking for support a little bit lower on these indexes. Let's look at the Qs. Qs are holding up a little bit better because of Apple, but right now it's putting in some bearish flag below the 20. Okay, guys. So as long as it stays below the 20, I do expect it to hit the next level, which is my level would be the 50 moving average on a daily chart at 172. I'm sorry, 72.24. If it does continue to bake in this lower range below the 20, my 20 is the blue line, guys. It starts to make a bearish pattern. Do expect further weakness. Let's go back to Apple. Apple's a beautiful chart. I did call it that inverse head and shoulders, guys, in my last video, and it does look like it does want to come to fruition. Look at that, beautiful. I did not expect for it to break the 200 that quickly, but the chart is a chart. That was the pattern on the weekly chart. If you guys recall on the weekly chart, I did mention it closed. It closed above that neckline on the weekly time frame, and it just did not enter. It did not get to my level where I wanted to enter. Did not meet my entry, so I wasn't going to chase it. I was looking maybe more, retest 20 and close back above here on the weekly time frame. Didn't do that. We just had one pause candle, closed right at that neckline, and damn, boom, to the blast off to the upside. As you guys remember, my target would be this back test of this trend line at the 150. 530-ish area. And if you can go back to hands of time, that was your really long-term trend line. So that could be a back test of that trend line. But that idea is definitely playing out on Apple. Let's take a look at some of these home improvement retailers. I believe they are reporting earnings really fast. I believe Lowe's is trending beautifully on the 20 right now. Beautiful little uptrend here on the weekly time frame. I always look at the bigger time frames because you can always expect a huge move on earnings, so you want to look for the bigger time frame supports. And to me, if I can scroll back a little bit more on Lowe's and see if I can find a level that's really, yeah, it's going to be pretty much this previous breakout area. On any extreme move, that's going to be your first support. That's way down to, the $35 area. Let me actually get the exact. Yeah, roughly the $35 area. That's your previous 52-week high back in 2006, 2007. So that would be a beautiful back test. Let's go on the monthly chart and see if you can see any other support moving averages. Yeah, sure enough, that's your 20-month moving average. So I do expect if it does, crash down for any kind of reason, that's going to be support right there, the $34, $35 area, trending nicely. But it has nice run up already. So the higher these things go up, the bigger the fall. Ultimately, okay, let's go to daily chart and see if I see anything else. Like I said, I like to look at the bigger time frames. The more intermediate time frame, obviously your 200 moving average here, that's going to be your solid support there. But with earnings, it's just very difficult. Let me draw that in. So your first support on the daily chart will be about $39 roughly, which is 200, and that's even kind of weak as well because you're kind of just riding it, so it's not extremely major, but yeah, it's going to be really solid right there, the 200, and it just had just huge run up already. Look at this, unbelievable move on Lowe's at the moment. So that's what I'm looking at Lowe's. Not much more on the daily chart. Let's go to Home Depot. Home Depot is also reporting this week, which they should trade together depending on earnings. And I already pretty much measured out a move. If it does break this trend line, let's go to a weekly time frame. Once again, I like to go to bigger time frames whenever you have earnings. And this is just a parabolic move. Look at this, pretty much vertical since mid 2011. This is just a beautiful move. So I do anticipate eventually these trend lines do break, and if it does, your first target would be, I believe, roughly the previous 52-week high from 2001 into early 2000. During the dot-com bubble. Look at this beautiful. That would be a beautiful back test right here. So that measured move, that trend line does break, roughly takes you in that vicinity. And when you do go off bigger time frames, you do anticipate they can pierce. So it could pierce through to about 67 and then close back above 69. But sure enough, that does seem like a decent spot to some long ideas here at Home Depot. If it does start to crash down, that's already a very parabolic move. Let's go to the weekly chart and see if we see anything else like a moving average at that price point. And sure enough, you do see that 50-week moving average right here, which is my green line. So that's my spot right now on Home Depot if it does drop there. Is there anything else we want to take a look at really quick? Let's look at Amazon. I haven't looked at Amazon in a while, so let's take a look at that. That's the weekly time frame. Ooh, I have a lot of stuff on that. Let's see if I can clean it up. That's a big mess right there on my charts, huh? Right now, just really quick, what I'm seeing, it looks like we're back testing this previous. Let me just clean this up a little bit. Sorry, guys. Did not anticipate to go over Amazon, but it's only been 10 minutes on the chart. I can go over a few more charts while I'm here. Yeah, it looks like a back test potentially of this breakout right here. See how this was resistance, right? Resistance now support, and you are getting a nice little a doji candle. Let me just see if it's a quick time counter here. Not quite, but you do have a nice narrow range candle on pretty good volume here. So let's see how it reacts at this 285. Not much. This if we can grab a Fibonacci, if we line up with a Fibonacci, that could be a decent spot on Amazon. But never gave us a bearish pattern. See how this bullish pattern failed? Once you close below this line, that was your sign that this bullish pattern failed. Sure enough, it did, and we are going to the next support, which is this 285 area. This Fibonacci does take you from this. If you take it from here, it's right in no man's land. If you take it from, let's take it from this pivot right here, and you do get 61.8 Fibonacci retracement. So there's some decent, fair amount of support here. And the only reason I say that is because you also have this previous resistance. Okay, so but you line up with a 618, pretty decent. You got a doji too, decent spot there. Not for me to trade because you are trading now below the 50. You could expect a counter trend balance. Let's go on a weekly time frame. So you have a major moving average there. Not what I'm seeing now, since my chart's not pulling up. There it is, and it does look like you're at the 20-week moving average from what I'm seeing right now. Yeah, pretty much at the 20-week. So everything's pretty much at the 20-week. Right now, you see the index is also like on the S&P. You're also at the 20-week moving average. Okay, guys. So that's just a quick update what I'm looking at, guys. Sorry, it's not very detailed. Just want to go over a few of the charts today. What I'm looking at. It's still early in the week, so let's see how it all plays out. The SPY is been a little bit of a weak position right now, trading below the 50-day moving average, but like I said, these indexes are at a bigger weekly moving average, which is the 20, and that's your, like I said, your more intermediate, longer-term trend as it's just been riding. And notice how the moving averages are still spaced apart. The uptrend is still intact on the bigger time frame, so I do expect support generally coming up in these areas what I mentioned on the daily chart. Okay, guys, just going off the weekly chart and daily chart, I do anticipate. Even though, don't let this fool you. I know this look pretty nasty right now. This looks pretty nasty. You close sharply below the 50 moving average on the daily chart. But the volume wasn't that outrageous, and it does seem like it's dying down the volume. So let's see. We have, like I said, this gap fill. I'm definitely going to be playing for an intraday player here at the 163.92 in that gap fill area, and this does kind of make a measure move. I think I calculated intraday. Okay, but sure enough, everything looks beautiful. Charts are working out very beautifully. Let's see how the week plays out. I hope you guys have a great one. Let me guys know if you guys have any ticker symbols you want me to go over. I would love to do that. Guys, have a great evening. I'll talk to you guys later.